Imagine buying your dream home, beautifully nestled near a coastline or in a vibrant urban neighborhood, only to discover that within a few decades, it's at risk of flooding, fires, or extreme weather. Climate change is no longer a distant concern. It's here, and it's fundamentally reshaping how, where, and why we invest in real estate. From shifting market values to evolving building standards, the climate crisis is forcing homeowners, developers, and governments to rethink the entire landscape of property ownership. Key impacts of climate change on real estate. 1. Rising sea levels and flood risks. Coastal properties are among the most vulnerable. As sea levels rise and storm surges become more frequent, waterfront homes and commercial properties face higher insurance premiums, depreciation in value, and in extreme cases, complete loss. In cities like Miami, New York, and parts of Southeast Asia, properties once considered prime real estate are now under serious threat. 2. Wildfires and extreme heat. In the American West, Australia, and parts of Southern Europe, wildfires are destroying entire neighborhoods. Even in unaffected areas, the proximity to fire zones is reducing buyer interest and driving up insurance costs. Similarly, urban areas are experiencing the urban heat island effect, making once desirable cities less livable and reducing their long-term real estate value. 3. Severe weather events. Hurricanes, intense rainfall, droughts, and other extreme weather events are increasing in frequency and intensity. These disruptions cause billions in damage, reduce property reliability, and influence migration trends, with people moving away from high-risk zones. This directly impacts housing demand, rental yields, and resale value. 4. Insurance and financing challenges. Insurance companies are tightening their underwriting standards or exiting high-risk markets altogether. As a result, property owners are facing significantly higher premiums or may be denied coverage entirely. Lenders are becoming more cautious too, meaning buyers may struggle to get mortgages for properties in climate-vulnerable areas. 5. Property values and market shifts. Properties in areas prone to flooding, fire, or extreme temperatures are already experiencing value stagnation or declines. Meanwhile, climate havens, such as the Great Lakes region in the U.S., parts of Canada, and Northern Europe, are seeing increased interest and rising prices. This shift is quietly transforming regional housing markets. 6. Regulatory and construction standards. Governments are starting to enforce stricter building codes, zoning laws, and energy efficiency mandates. Developers must now factor in climate resilience, such as elevated structures, fire-resistant materials, and renewable energy systems. These changes increase upfront costs, but may protect property value in the long term. 7. Investor awareness and ESG pressure. Institutional investors and REITs, real estate investment trusts, are under growing pressure to account for environmental, social, and governance (ESG) factors. Climate risk disclosures are becoming standard practice, and portfolios are being re-evaluated based on environmental exposure. This trend is likely to influence everything from asset pricing to real estate fund strategies. As the planet warms, the most valuable property asset may not be location, but elevation, insulation, and climate resilience. In a world shaped by rising tides and intensifying weather, the real estate sector sits at the front lines of both risk and opportunity. For those who adapt, invest wisely, and plan ahead, climate change doesn't just pose a threat, it offers a chance to build the future of sustainable living. So the question isn't just where to buy, but whether your next real estate move is future-proof. Are you ready to invest in resilience,